Welcome back, everyone, to this shipping update in the end of 2019, almost 2020 now. Wow. So I wanted to do this before 2020 because IMO 2020, well, kicks in any day now, and you see, I really thought, yeah, I know it's not that type of ship, and I know there were backgrounds that had that type of ship, but I think this picture here, and I rarely talk about this, it is symbolic of what's going on the shipping in the shipping market right now. You just have this calm-ish, more calm than you'd think would be what's about to happen, and I'll get into that. So, a review of 2019 in the shipping sector. It has really been two stories. The story of tankers and the story of everything else. Now, while more than just tankers are affected by the IMO 2020, which is going to be taking effect. The tankers are the ones who have seen moves in rates, and now maybe there's a number of other factors for that, and I'll discuss a few of them. But really, the tankers, both dirty and clean, dirty, by the way, is crude, and clean is finished products. Just so you know the terminology that I'll use, and those two are going to be the ones that I'm speaking about mainly later in this video. But the point is, they have seen distinct pickups and they are well into the profitable levels, and there is potential for that to continue and maybe even be amplified by 2020 if things go a certain way. So the basics for IMO 2020, for those who do not know, is a new emission standard for ships, transport. Now, this means that ships will either have to install scrubbers or will need to burn a different fuel. Now, ships weren't designed for that, so there is a whole bunch of delays, backlog, both in dry dock for the upgrades and also in refueling the ships because the facilities aren't what everyone's used to, so it's a big shift. Now, this not only affects the prices of the different fuels, but it also affects logistics because you have ships waiting in line for fuel, which means they're not transporting what they need to transport, which is synthetic more demand. Now, if you're thinking, wow, okay, they've had only a few years to prepare and they still aren't ready, huh? Okay. Well, that's fine, but this real backlog is really going to resolve itself really quickly because everyone is so on top of things. Yeah, that sounded better in my head. So I thought I'd go into the bear thesis first. And my view, the bear thesis hinges on a few things. One, shipping companies rarely make money, and they are making money now. So by that, looking at history, looks like, well, now is the outlying time. Okay, that's one. Another thing, in the past, management of shipping companies don't really have the best track record of doing what's in the shareholders' best interest. That's two. So normally how these cycles work is rates spike and all of a sudden share price spikes and all of these companies suddenly have access to money and they spend more than they have access to. Incredibly. And so what happens is the rate spike, everything spikes, but the capacity comes right away from all of this money that the shipping companies finally have to spend. So a year later, 2 years later, whatever, all the new ships and cycle over. Now, this time, so far, there's been a bit of apprehension towards spending money. Now, maybe this is because some see the IMO 2020 spike as temporary, and maybe that's the bear thesis this time, that this temporary move is just temporary and rates will go back down. That's possible. Or the belief could be that the rates will resolve themselves and the market is fine and there's no shortage, which again, is possible. But my question to the bears in this case would be, who has spent enough money so far to reverse the thesis, reverse the cycle? Because if you look, there's always some people expanding the fleet, but overall, um, is it enough to keep up with the retiring older ships and potentially demand growth? So I'm not sure that it is yet. Now, why hasn't more money been spent in the sector if the rates are very high? Well, looking at it, I think there's a few possible reasons for that. One, IMO 2030, which is, as some of you may know, but it's less talked about than 2020, it's another emissions standard that will be set in 2030, meaning that many of the ships that are currently being designed or built or would be ordered in near years would be obsolete as of 2030 if with new emission standards. So you have this double conundrum really where people are hesitant to spend money because A, the rate spike may be temporary for 2020 for the IMO 2020 disruption, and B, you really want to be ordering $100 million ship if which is supposed to not make, well, it's supposed to make money, but realistically, historically, they don't make much money. But would you really want to order $100 million ship if it's going to be obsolete halfway through its life? I think that that would be the type of instance that would make you maybe more tentative before ordering one. So looking at supply and demand in the space, you have different, obviously different growth rates for demand in the different sectors of shipping. But if you look at clean tankers, for example, you have some refineries that are set to come online in the Middle East in Q4 of 19, Q1 of 2020, and you could look to 2020 and say, well, demand could grow at 8%. And meanwhile, you look at supply and it might be growing 2, 3%, 2.5, 2.1 is a number quoted. So my point is that in the meantime, you should have a steadily bullish backdrop. And this is in the face of a market where you saw multiple times in multiple sectors different sanctions or different problems, unexpected issues here and there that pop up and cause rates to go ballistic. Realistically, you look at the VLCC spike when Costco was sanctioned, and that shouldn't happen in an immensely oversupplied market, which leads me to think that there's not ample supply out there to cover for uh, temporary issues. So as time goes on, if IMO 2020 resolves itself, you could have a very different picture than before, even once everything's straightened out. So this little scenario that I'm about to mention is kind of analogous for what is happening in the space. And this is, you have all sorts of weird and chaotic things happening. For example, Aframaxes, which are the one of the sizes of ships that carries crude oil. Now, it the rates have spiked, and in addition to that, you have these older Aframax ships that would be obsolete, like now would be set to be uh, set for demolition, and they are being sold to store excess fuel from the excess fuel that is not where it should be because of the whole shifting demand dynamic. So you have these Aframaxes being stored for fuel. You have like that would have been demolished. You have the Aframax rate spiking, and then you have the LR2s, which is the clean finished product cousin, same size ship as Aframax. The ship that could be an Aframax if it chooses to, and the rates on those are half of what the Aframax are, but still very high because you have Aframaxes that are the rates are 80K per day, which is insanely profitable for them and very unsustainable. But I'm not saying it can't go higher. It very well could. Depends what happens. But my point is that the LR2s, which if they wanted to, they could be an Aframax. Well, their rates are 40K, which is decent, but it's not 80K. And so my point with this whole issue is that if you look at the whole scenario out there, you still have a lot of ships that need to find their place and demand that needs to sort itself out. And I'm not saying all of this chaos is bullish, but the parts that are disruptive are. And you still have a number of, well, you have LR2s that will go dirty, and then you have the rates for LR2s should increase. In the meantime, you have all sorts of mess out there with other demand potential alterations. And so the whole thing is just crazy. So really, when I look at shipping right now, particularly for Scorpio, which is a clean, mostly uh, tanker, Scorpio tankers, that is. There's four scenarios that I see. One is spot rates fall and the company shares tank. Well, to effectively tank, maybe fall, I don't know, a lot. Basically, let's call it a lot. And the company goes back to trading at, I don't know, half NAV. And this is a possibility, but it would basically rely the bear case on the price of the equity getting cheap again. Now, shipping is not a long-term fantastic business, so this could happen. The other thing is spot rates do fall, and the company continues approximately trading at NAV because there is room where they could trade at NAV because that's where they're at now, and so they basically continue trading at replacement value until either they're not a company anymore or there's a cycle. That's possible. Third option is spot rates don't fall. And I'm using don't fall because I don't like to throw in rise because they're already basically pretty high. So if they don't fall, then this is the steady as she goes scenario that I've described. Basically, it would amount to the NAV of the companies in the sector, kind of grinding higher. And as long as this company is not trading at a premium to NAV, it's steadily gaining value. And they could use that money to, I don't know, pay off debt, buy back shares, pay dividends, whatever. But they have the money, and there's no point in them expanding capacity when their shares are cheaper than new ships. Fourth scenario is that the market finally decides that this isn't a one-off spike and the company might be making money for a little while. And if this happens, well, then the market might decide that the companies deserve a valuation that is more than 1 or 2 times free cash flow. And this is what the bulls are hoping for. Let's go with that. And in the meantime, yes, NAV still goes up while the company maybe starts trading at a premium to NAV. Again, this is a scenario that the bulls are hoping for. So realistically, what happens next? I don't know. Nobody can tell you for certain what's going to happen next. But I think that what happens next is we stay at scenario 3 until we make a decision. And I'm fine with that. And My point of this update, my point of updating the thesis and saying where I believe we're at now is as long as we're trading at net asset value, at replacement value of the ships, I'm not really in a hurry to sell. Of course, rates could turn around and the equity could get smacked, and that could be very bad. But the point is, all around the sector, you don't hear people talking about ordering new ships. You have people talking about deleveraging, share buybacks, paying dividend. And as long as that is the trend, and as long as people are super reluctant to spend money, I think that the rates can continue to do well, and the equity can continue to do well. Now, at a certain point, if the equity gets super pricey, or if the rates kind of start tailing off and the market balances after the chaos, the IMO 2020 chaos, and turns out everything's fine, well, then that would be a cause for reevaluating and having a fresh look. But for now, realistically, I think that this will go one of two ways. I think that there's a real possibility that we're close to the part where the market makes a decision that this isn't a one-off, or that these companies are just making too much money at these prices to ignore. And that is both the point where the clock starts in terms of investment and the point where the real uh, two-way risk begins in terms of there being sharp upside and sharp downside risk. Now, if that happens, that would mean the market stops looking back at the past, at what happened through the bear market, at the discount to NAV valuations, and starts looking forward at growth, share price growth, profitability, whatever. So I think that is the upside scenario, and that is the scenario I'm definitely hoping for as a bull. Eventually, I mean, I'm fine with this going forward at this rate. That's fine with me. If not, it could, if the market suddenly is super calm in the new year and the rates just go right back down and it's a big nothing burger, well, it could be a move down. I'm not gonna lie, it could be very quick because people could be giving up on the IMO 2020 thesis. But realistically, once that shakeout of the thesis is done, then you look at the equities again, and let's say it's a big drop, you see that's trading a discount to NAV again. And so it might not be at 2 times cash flow then, but it might, because these equities can be very volatile and the rates can be very volatile. So today, I like the risk reward setting for the thesis. If we were trading at 2 times NAV and 10 times cash flow or whatever, or it's a different risk reward setting. From today, discount to NAV, potential catalyst, 2 times cash flow. For me, not enough of the upside potential is priced in this scenario. As I wrap up this video, I really wanted to be sure that I covered this and reminded people. Even though I sound like I really like the risk reward, well, for tankers and clean and dirty, whatever, today, this is not an investment that I have any idea what it will look like in 5 to 10 years. I like it because I think that in the next 2 years, many of these companies can make enough money for the equity to be worth it at today's prices. And so until something changes on this trajectory, I am bullish. That being said, this is not something, no matter how bullish I am today, not something I would say, yeah, you want to buy this and hold it for 20 years. You absolutely probably do not. Maybe you do, maybe nothing changes for 20 years and you currently own the last ship on Earth. Probably not, but you can't know. You cannot know until things happen, and that is the case not just for this, for many cyclical industries. Money has to be spent, but you can't know when it's going to be spent. So for now, things look, for now, whatever opinion you have, if that's your opinion forever, at some point, it's probably not going to go well. For now, I think that if nothing changes, you're going to make the sector is going to make enough money that eventually it's going to force things to change. And I really wanted to reinforce this part because this is probably how a lot of people eventually get burnt in cyclical industries. So it's important to realize that even though something is super bullish for now, or not, maybe it's super bearish for now, at some point, money is spent, things change. Thanks for watching, everyone. I hope you enjoyed this video or found it informative at the very least. And remember, when you're investing, it's your money. Invest it carefully and don't just listen to anyone. And that absolutely includes me. Do your own research. Don't just hope.